In this video, I'm going to teach you a very simple market structure that you have probably not heard of before. And once you understand this simple structure, I promise you, you'll be able to predict the market like a beast. At the first glance, looking at the screen, looking at the chart, you'll be able to know what the market is going to do and where it's going to go for the day or for the week. So if you're interested, if that sounds interesting, stay to the end of the video. Pay close attention to what I'm about to teach you because this is a very important structure. So today's video is going to be about a daily structure. So first of all, we need to know what the daily structure is. The daily structure is a structure behind all other structures in the market. So this is the structure that is behind the scenes of other structures in the market, and it appears on a daily basis, therefore the name daily structure. And without this structure, there will be no market. So this structure is the foundation, is the core of the movements in the market, how the institutions, how the banks move the market. This is the core structure that you need to know to be able to easily identify where the market is going to go for the day or for the week or whatever you want to predict. So it produces high prediction accuracy once mastered. Once you master this strategy, this structure, you will be able to predict the markets with a high degree of accuracy. You'll be able to know at first glance where the market is going to be going for that day. Okay, so now I'm going to show you. I'm going to explain briefly how the daily market structure works. This is the daily structure. This whole structure right here looks pretty simple, right? So this structure is the foundation of all other structures. There's a lot that goes into this, just this structure. It looks like a heartbeat, right? You can even say this is the heartbeat of the market. To understand this structure, you need to first understand how the sessions work, because this structure works with timing. It gives a high prediction accuracy, so it works with timing. Timing is the most important thing. So now we need to identify the sessions of the market. We have the Asian session, we have the London session, and we have the New York session. So we have the Asian session, the London session, and the New York session. The way this works, this structure is broken down into three pieces. We have the Asian session, which lasts for like 8 hours, which is this sideways movement you see here. Then the London session is the breakout session. The London session is the breakout session. And then the New York session is the reversal session, right? The way this works is at Asian session, the market consolidates, moves sideways. Coming into London session, you have a breakout in the wrong or in the false direction for the market makers, the institutional traders, inducing breakout traders to take the buy in the wrong direction at the opening of the session of the London session, and then they make their move. Coming into New York, then they reverse back and end the day the way they started the day. I've explained this in my previous video, so check the cards. Watch that previous video if you want to fully understand how the structure works. I'm not going in depth on that. So the way the structure works is you have the Asian session, you have the London session, and you have the New York session, right? And this is how they form the trends daily, and this is how they form bigger structures, right? So this structure, basically, if you multiply this, you'll see something really interesting here. We know the market consists of an uptrend, sideways movements, consolidation, and a downtrend. Those are the three cycles of the market, right? So if you go back to this structure, you can see this is the sideways phase, this is the uptrend, and then this is a downtrend. So this whole structure alone consists of the three market cycles, three market phases, and then combined multiple times you will have an overall structure. So if you combine this and connect the highs, you will see that this produces a downtrend. And if you turn this the other way, it will give you an uptrend, right? So here you have your high, lower high, lower low, lower high, your lower low, and then your lower low here. You're hopefully going to get another lower high. So this is how it works. You have your consolidation, Asian session, London breakouts, Asian session, London breakouts, Asian session, London breakouts, right? This is how they form the trends. This is how they form this structure. So inside this structure, like this lower highs and lower lows and lower highs and lower lows, you have that structure like this, right? That's how they form this overall structure. And retail traders, when they look at the charts, this is what they see. They see only this. They don't see the in-depth. They don't see the daily structure. But institutional traders, this is how they identify their trends. This is how they identify their structure. They don't identify it the way retail traders identify it like this, right? If you also want to identify an uptrend, it's the other way around like this. And if you just copy and paste this, you'll see it gives you an uptrend, right? It gives you an uptrend. And if you connect the lows, you have your downtrend right here, your uptrend right here, sorry. Then you can draw your Asian session, Asian session, Asian session, Asian session. So this is how they move the markets. This is how they create the highs and the lows of the markets. And also, if they want to reverse, they'll just basically do the same thing, but in reverse this, right? So now they move sideways, they go London breakouts, New York reversal, and then end the day, right? And then that is how they form your double tops and double bottoms. That's basically how they form the double tops and the double bottoms in the market, right? And then if you copy and paste this one, you get your downtrend, and the cycle goes on and on and on, right? So that's how they form the trends. This is how they form the structure of the markets. They can literally form any pattern with this structure. If they want to form the head and shoulders pattern, they'll basically just, if they're going in an uptrend like this, and they want to form the head and shoulders pattern, what they'll basically just do is, this is your shoulder, right? Then they'll invert it like this, and then they'll give you like this. So if you draw your Asian session, you can see this is how they form it. So you have here your shoulder, head, shoulder, right? This is how they form the head and shoulders. They can form the M, they can form the head and shoulder. They can form any pattern they want to form using just this pattern alone. And that is the daily structure. So here we have the Asian session here. You can extend this consolidation all the way here. You can see they hit the stops, took out liquidity here, took out liquidity here, and then made their move up. All right. Here they took out liquidity, but not that much, just a pinch. You can say this is your consolidation right here, Asian session consolidation. You see how they broke out like this, and then ended the day right there. You can see here too, consolidation, breakout, reversal, come back, end the day in consolidation. Isn't this what I just drew for you guys? Isn't this exactly what I just drew? So this is how they move the markets, right? Almost every single day. Consolidation, hit the stop high, hit the stop up, and the day in consolidation. consolidation, hit the stops low, rise back, end the day in consolidation. So this is basically how they move the markets. If you found this video helpful, click the like button, subscribe to the channel. Also, if you don't have a full clear understanding of how this structure works, how to trade the structure, then check out this video and you'll know just exactly how to trade it. And I'll see you on the next one.